ETF demand is soaring, but investors are making these big mistakes, financial experts say. This is an article I was reading this morning about ETFs, and I thought I'd share some of the highlights with you. ETFs brought in $540 billion in new money during the first half of 2025, which surpassed total inflows for the same period in 2024. These things keep getting more popular, and many investors are vulnerable to big ETF mistakes, which threaten financial goals. Is my ETF threatening me? The biggest mistakes aren't about the products, but how investors use them. Some investors assume all ETFs are the same without considering the underlying assets. Did he just call out the yield max funds? If you don't look under the hood, you may think you're buying a diversified fund when in reality you've bought something extremely narrow and risky. Like any investment, your ETF pick should match your risk tolerance, goals, and timeline. But a common mistake is chasing performance based on past returns, which may not continue. Basically saying it might have went up 20% last year because it was a hot sector, but that does not guarantee it's going to go up 20% next year. One of the benefits of ETFs is the ability to buy and sell the assets throughout the day, similar to a stock. But investors trade too often. Some of the ETFs are set up for a more set it and forget it, like the S&P 500. The beauty of ETFs is a low cost, tax efficiency, but investors often treat them like trading vehicles instead of long-term building blocks. I talk about this all the time. I have a bunch of ETFs that I use as the foundation for my investing account. Overall, I think ETFs are a great way to do investments for my portfolio. Let me know in the comments, do you own ETFs? And give me a follow to stay in the loop.